At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081-5171-7171. Alpha Morgan, growing your wealth.
Now, number one, as we started this discussion this morning, a couple of things you made reference to one major development, that is that the price of oil crossed $80. That's Brent. $80 this morning, it's about 80.05. That's the first time it has got to this level in about almost 2.5 to 3 years. Number two is the fact that this morning, or yesterday, last night, Ford, which is the second largest auto manufacturer in the United States and in the world, announced a plan to invest $11.4 billion in an electric vehicle manufacturing facility in Kentucky. I take these two events and I want to put them in context before we start this presentation this morning. One is that in the year 2021, the total number of electric vehicles registered in the United States was only 2% of all the new vehicles. In other words, 98% of vehicles registered and manufactured in the United States are using petrol or diesel. President Biden had announced 2 weeks ago that by the year 2030, not less than 50% of all the vehicles flying the roads in America will be electric vehicles. In other words, we are going from 2% of the vehicles produced today to 50% of the vehicles in the next 8 to 9 years. It has two implications. One is that the carbon dioxide emission from the cars, because today 98% of the cars flying the roads in America are all petrol-fired and they emit carbon dioxide, and that helps add to global warming. Now that comes to an end immediately, and it means that oil, the obsolescence of oil is staring at us in the face. So while on one hand, Goldman Sachs says that the price of Brent will get to 90 and that the price of West Texas Intermediate will get to 80. On the other hand, we are seeing a structural and strategic shift in the use and in new vehicles to electric vehicles. Therefore, medium term to long term, the price of oil is bound to fall. Medium term to long term, the use of petrol stations for buying petrol will only be used for buying charged batteries rather than petrol stations and outlets. For us, it has a much more fundamental meaning. To vehicle parts. When anything happens to your car, as you know today, in 2 or 3 years' time, when you ask for any part, they'll say that part is no longer under production. Those parts are no longer under support. So if anything happens to your car gets grounded. What it does mean is that from next year and the year after, even people buying new cars in Nigeria will be buying electric vehicles rather than buying petrol-fired vehicles. The mechanics will be trained in only how to support only electric-fired vehicles. Remember those days when we had carburetor? We had crank engines where we had to crank the engine when the battery. Then we had carburetor engines. Then we had fuel injection. Now we're having super fuel injection with nozzles. Where the mechanics that were trained, that were very good at looking at your carburetors, have no idea of what it is. When in those days you had to set the contact set before you, and all those things are gone. Same thing is going to happen. You will not have support for your vehicles. And therefore, it calls into question, at this time, we as a country spending $3 to $4 billion trying to repair and rehabilitate refineries when 3-4 years from now, half of the vehicles coming to Nigeria will be electric vehicles who will not use petrol or any of these things. Even the engine oil, right? So there's a major development here. I think I just wanted to set some context to this. Now, what global investment environment are we on? In all of this, why am I saying this? Because you investors are, the globalization of the economy has become more apparent. If you follow the newspapers in the last 1 week, the leading story is that Nigeria has raised $4.1 billion in 3 tranches of the Eurobond market. So, and it was oversubscribed, four times oversubscribed. That means interest in our bonds was 4 times more than which was available. But that's not the absolute accurate story. The accurate story is that we raised it at rates of 6.15 for the 7-year, and then about, I don't know the percentage, the coupon rate for the 30 years, and then there's another one for 10 years. When you look at that and you compare it to what Benin Republic raised 3 months ago, Benin Republic got their 7 years at 4.38 and got their 31-year at about 7.8%. Benin Republic's GDP is $16 billion, less than 4% of our own GDP. Benin Republic is rated as B plus. We are rated as B, right? And yet they were to raise money in the market. That's important to know that we raised money, but the rates were not that friendly. 2, ever since then, I'll come back to that in a minute, the US Fed has now said that it's almost imminent that they will increase interest rates sometime next year. They wind down their tapering program. The United Kingdom, Bank of England announced this morning that they are going to increase interest rates in the year 2021, not 2022. I'm not talking about 2022 or 23. The Bank of England said today that they are likely to increase interest rates before the end of this year. Don't forget, England is facing a petrol crisis as it is. So these are the things that we are confronted with right now. And I want you to see it. So, and your investors in this market are fully aware of the fact that, yes, Ade Buraimo talked about falling inflation. But when you say falling inflation, when inflation is over 17%, and that is measured headline inflation, food inflation above 20%, it means that investors are wary and worried about inflation. And therefore, they'll be looking across different markets. No matter what the restrictions are, they'll be looking at different markets because money is fungible. So what are we seeing globally? So why am I saying this? The Nigerian investor is just as sophisticated or as a rational economic agent as his international counterparts anywhere in the world, from Brazil to Argentina to New York to Malaysia. And so everybody's looking at the same world, global movement, flows of funds and people, and making their decisions as rational human beings. So what's happening in the world, global investment world? Very important. Global assets under management has increased by 284% to $103 trillion in 2020 then to 2021. It's also, it's important to know that, it's very important to know that the global economy, the total GDP of the world is roughly about 100 to 100. So the assets under management is almost equal to, or more, it's actually more than the total GDP of the world. Why is there such an increase in assets under management? Why? There's been strong market performance and favorable net flows. In other words, in spite of COVID, in spite of the deterioration we've seen the markets soar. Why would the markets be doing so well when the global economy is contracting? Why would the markets be doing so well when people are sitting at home? Why would the markets be doing exceptionally, positively, exceptionally, and extremely, stratospherically at a time when people are dying? Over, God knows, over 6 million people, I think, in the world have died from COVID and COVID-related. Not, that is significant. Okay, so why are people being prosperous, or why are companies making money when people are confined to their homes and are dealing with vaccines, covering their faces with face and nose masks? Why? That's a very important question. It means that where there's value in the world, where value is being created, have almost nothing to do with people's out rolling up their sleeves. That the service industry and mental power has exceeded physical power. In other words, those who are working smart are doing much better than those who are working hard. Those who are physically contributing to the normal laws of diminishing marginal returns and all of those things have failed because the productivity from technological infusion is much more than the wealth created by extraction of goods. Unfortunately, it means just like in India, where there are 1-point-something billion people in India, that Bangalore, which is one conurbation in India, where all the IT people are, is producing 70 or 80% of the wealth of India, using all the call centers and all that. That is what is happening. I want to emphasize this because Nigeria is facing a major economic crisis. Don't believe what the data is correct, but it's not complete, right? So it's what we call selected, data that can justify certain things. So we will be confronting, like I just told you about the electric vehicle, the threat of the electric vehicle, will be in the short run intoxicated by this nominal price of oil of $80, which has its own playback contradiction for us, because at $81 a barrel, your landed cost of petrol could be as high as 400 naira per liter, while you're selling at 165, 238 naira negative for every liter of petrol that is there, and we have not started. So I want you to see this as investors. I want you to see this because you'll be buying shares in companies. Yesterday they said one company was on hold. I think that was Total, and Corn Oil was on buy. One of the investment houses came up with that. And so it's important that you understand how global events, regional events, and domestic events are all in synchrony, right? So the global assets under management, which I referred to earlier on, which was $103 trillion in 2020, is expected to get to about $150 trillion, 145.4 really, by 2025, which is only 2-3 years down the road. Among managers, you have passive managers and active managers. Passive managers mean that you do nothing, and you just buy the index. Active managers mean that you go in and out and you identify what are investors looking for. They're looking for value stocks, or they're looking for growth stocks, or a combination of both. So basically, the active managers of this $103 trillion, $87 trillion, or by 2025 of the $145 trillion, 87, almost 60%, right, of global assets under management will be active, while 40% will be passive. Another thing you must know about passive management is that it is said, and widely believed, even though a myth, that if you do nothing about your portfolio, if you just hold a normal portfolio and do nothing about it, after 5 years, all the profits that the people who are very active, you, just by doing nothing, will recover and come. So after 5 years, both the active and passive portfolios will have the same value. The only thing is that the man who is active has been going in and out and taking some money off the table and put some, so you will have some money off the table while you will have all your money be on the table. That's a myth, but nobody has disproved it up to now. Now, what is happening? I just talked about the fact that alternative assets, product innovation. So Apple, from iPhone 1 to iPhone, God knows where, iPhone 13 has come out and people have already kind of hacked it, but there's even a projected date for the launch of iPhone 14, which will have the watch. It has a Turia, whatever it is. Technology has become so, how would I put it, so ubiquitous. And for 1 minute, I'll just digress if I come back to the global. We said that by shutting down all the base stations in Zamfara, Sokoto, and parts of Katsina, I think, state, terrorism and insurgency will stop. Guess what? Last night, over 60 people were, about 8 villages were burnt and attacked in Sokoto State, where the base stations have been closed down, no telephone calls, no POS terminals, no bank transfers, everything, they've been isolated, right? However, the bandits came in, finished all these things and took off. So is it true, therefore, that if you shut down the base stations, is it true, therefore, that if you shut down, in fact, Katsina says that commercial charging of phone, because people have no light, you have to pay 10 naira or 20 naira to charge your phone for 1 hour, 100 naira to charge your phone for one hour. Now, is it therefore, they stopped them so that they say the bandits were, or these insurgents were charging their phones, making calls to demand ransom. So what are we saying? We have seen in the last 48 hours, between Kaduna and Sokoto, we've seen these people attack. So can we say categorically now that if you shut down the base stations, there'll be no insurgency in that area? No. We said before that when you close the border, there'll be no insurgency, there'll be no terrorism, there'll be no Boko Haram. We closed the border, that increased. So jumping to these conclusions, what am I trying to point out? I'm trying to point out here that technology can be used both positively and negatively. And that even crude bandits, if you call them whatever they are technologically suave and sophisticated enough to say that after shutting down of the base stations started only about 4 or 5 weeks ago, now they've found a way around it. And they've become, in fact, more vicious. So the world is moving from just producing to innovating and thinking, creativity. Even in negative endeavors like banditry, you're seeing creativity coming in. There's another thing that's happening in the world, increased leverage on digital platforms. Digitization has become crazy. Now that COVID is over, now that COVID has declined, we are seeing that even the traditional shops are having difficulty attracting customers. People are now used to buying things through e-commerce, and therefore they stop going out. And if they stop going out, they stop using taxis. They stop, buying things on the side, on the roadside. So it changes the structure of things dramatically. So the physical brick and mortar economy of the world, right, is now reacting, now fighting back to get their place. We've seen a gradual rebound in the job market, but guess what? Biden announced that America on the 4th of November will allow people to fly in and all that. From that day on, the stocks of airlines, ValueJet, JetBlue, Southwest Airlines, all those stocks have increased by significant amount. But it's not, people are just not going to fly. When they fly, they arrive there, they will have to use Uber taxis to go to their houses. When they get to those places, they will go to the shops. When they go to the shops, so what we're seeing retail surge, Walmart and other stocks. We've seen increase in duty-free. Now, right now, they're not selling duty-free because it's a platform of duty-free on the aircraft. They're not selling All those things are going to start coming back because even Biden took his booster shot yesterday, right? And a lot of people are now taking their booster shots, right? People above 65 and others. Children are now being vaccinated. Children between 10 and 15. Before they said children can't get this. Now children are getting it. Children are dying. So, So I'm saying this because for you, who is an investor, sophisticated investor, you are not only looking at the Nigerian stock market, which we'll get to in a few minutes, and why, but you're also looking at the global markets, and that there's a consistency between the external environment and the domestic environment. That's part of the reason we're here today. Now, another thing you can see is that, look at on the blue lines here, show you the S&P 500, which is almost all the stocks, and the orange line here is showing you the month-on-month return. You can see that the month-on-month return, if you multiply by 12, if that is something to use, 3, you're getting about 36% return. While the S&P itself is soaring in spite of everything else. So 9 months of gain cumulative growth of 2.6% in 12 months, highest growth rate since November 2020. Earnings growth and attractive valuations. So you find companies like Apple reporting $40 billion worth of sales a quarter. A quarter. So about $160 to $200 billion of sales in 1 year. I want you to sit back and think, $200 billion of sales in 1 year. Total number of employees all over the world, direct and indirect for Apple, maybe 100,000. We have 200 million people in Nigeria producing and so much of land space. Our total GDP in a year, right, is $429 billion. Our total export earnings, what we are selling, at best, is about $50 to $55 billion. So what Apple and the 100,000 people make in 1 quarter is what the whole of Nigeria will sell for 1 year. I want to divide that earnings by the 100,000 to get the output and profitability per man, and divide your 48 or lousy $50 billion with the 200 million people, and you see how much you are producing in a year. That shows you how productive or unproductive we could be. Very wrong comparison, but it's important to see it. Therefore, not to talk of Google, not to talk of Facebook and Instagram and all this other, right? When did Mark Zuckerberg start? After he left Harvard College undergraduate, and look at, he has over 5 billion users of Facebook. Look at Twitter, right? Look at TikTok, look at all these other people. Okay. Now, coming to look at the sectors that are performing in the US, energy, 29%, but in first quarter 2021, second quarter 2021, you now see third quarter 2021, energy is minus 6%, right? So where are we seeing growth? We're seeing consumer discretionary, we are seeing communications and services, we are seeing financials in America, and we'll come back to that. So energy sector is recording the highest gain, 29%. Infotech outperformed others, and there's increased demand for digital products, and people, whatever you know, Zoom was nothing. Nobody heard of Zoom before. No. Zoom means what? That was before COVID. Now, Zoom is now a verb, that, oh, let's have the Zoom, let's have a Zoom. Just like Xerox was used interchangeably with copier or copies. Go and Xerox it, go and do that. Go and Google it means that go and search for it. So when people start using the name of a brand as something that you don't know the difference between the brand and the product, it has become internalized as a way of life. Go and Xerox it. 100%, 90% of the people in the world do not know that Jeep is the brand and that SUV is what it is. Jeep is not a, but they say, go and bring the Jeep. Go and bring that, that he has driven one Jeep. G-Wagon is a Jeep. Jeep is, every time you say that, you are propagating the brand of Jeep made by General Motors. So But it's a way of knowing that, whether there's Galaxy or anything, we call it iPad. People have forgotten that iPad is the brand of the tablet made by Apple, not and a Galaxy or Samsung, anything made by Samsung, but it has been. So tablet now equals iPad. So that's, and the trick of asset selection is that look for those things that have become iconic, that people have come to accept as a reality. Like ketchup, Heinz, baked beans, Heinz, they've get me Heinz. But it's not baked beans. Now, what's happening to, so one, we talked about assets under management in the US. Now let's look at global flows global flows fell by 35% in 2020, investment flows. And this affects you. We look at Nigerian stock market. Oh, foreign portfolio investors are taking their money. It's not alone. Foreign direct investment flows fell by 35% in 2020, from 1.5 trillion to 1 trillion from 2019. But it's now picking up. The flows into Africa fell by 16%. And if you look at Africa, including Nigeria, of the top 20 recipients of foreign direct inflows in the world, 8 are developed economies, 6 are emerging, 6 are developing. No African country came in the top 10 of this 100 or something $1 trillion. This is what happened. So, but almost all the countries that benefited most have flexible exchange rates, and many of them have open door policies. They don't have a shut door policy. Of course, none of them, for that matter, are banned something like Twitter. 5.9 billion. But Egypt is a different case. Egypt performs a particular role. 1, the Suez Canal. 2, they are the bridge between the Palestinians and the Israelis. And of course, Israel is not a part of the United States, but it is a part of the United States. Therefore, Egypt gets money to keep them. If Egypt is calm and the Gaza Strip is calm and Suez Canal is calm, at least the world economy may not be suffered. The second recipient is DRC, Congo. Again, another autocracy there, another country that has quite crooked. But what DRC has, the uranium. Uranium is what they use for nuclear power and nuclear bombs. So anytime you have priced minerals in an African country, 2 things happen. 1, total crisis within that country. And 2, what we call resource nationalism and the battle. So you find that diamonds in Liberia and Sierra Leone, diamonds in Angola, it is not by coincidence that the battle, domestic violence and civil unrest always accompanies where their mineral wealth, because they continue fighting over the minerals while the mercenaries try to take it out. Nigeria so far, oil is not what you can put in your pocket and run out of the country. You need the infrastructure. However, since we started going on to solid minerals and gold, is it coincidence that we are having banditry and people who are exploiting and taking these things? Gold, diamonds, and other. Okay, so this is where we are. Now let's see our share of world investment flows, which is the blue line. We have 0.19. But don't forget our population. We have 200 million people in a population of about 7 something billion. So we have about 2.25% of global population, but we are receiving only 0.19. So I want you to divide 2.25 by 0.19 and you see how many times less we are getting. What we should be getting is at minimum 2.25 or 3% of global investment flows. That's another red flag. But even the flows we have, foreign direct investment is nothing compared to foreign portfolio investment is hot money. And those are the ones that come into the stock market, buy some stocks, and when they're going, they sell So two things happen: the stock market crashes, two, your currency crashes. So this is what the Nigerian Stock Exchange is doing compared to the rate of inflation. We said investors always want to cover themselves for inflation. So what are we seeing here? We are seeing Nigerian treasury rates for 364 days, which is that line there, 7%, while the month-on-month return of the market is lower than that, the blue line. So rational investors, I said, let me take a little bit of treasury bills and how we'll see in a minute how the funds, the pension funds and others have reacted to this. As far as the Nigerian Stock Exchange is concerned, in the quarter, we've seen the high blue line, oil and gas supply, and so on, increase. We've seen the gray line insurance increase. And then in Q2, we saw oil and gas go up to 17.8%, and we saw banking also go up by 10.7%. But there's no consistent one. The only thing that is consistent we've seen here in all the quarters so far is oil and gas. And we'll have to interrogate that. But insurance, industrials are now beginning to look good. Industrials were now down -7% in the first quarter, and it's up to 3.8% in this quarter. Pension funds in Nigeria, that is involuntary savings, has gone all the way to 12.7 billion naira. So RSA contributors have increased because people are being compelled. You cannot apply for a Nigerian contract and go through what they call the Public Procedure and Procurement Act. You have to go through that, and that means you must pay your pension, so on and so forth. In Nigeria, we have high unemployment and underemployment. So we're looking for people who are labor intensive because they can buy labor for as cheap as a song, right? So, but unproductive labor can only even reduce your output. So there's value creation and value destruction. So we've seen customer dissatisfaction with investment options, and they are also moving out of the market. So Nigerian fund managers, and this is what happened, the typical portfolio, equities earlier Q4 and Q1 and Q2. So in equities, last year, Q4, equities were 27% of the portfolio. In Q1 this year, it had dropped to 17% of the portfolio. And in Q2, it had dropped to 13%. Why are Nigerian pension funds running away? Where are they putting their money? They take it out of equities. They're putting it in what? Commercial papers. Commercial papers, 29.67, and dropped to 7%, and now it's 7.3%. Why are they doing this? Because you have MTN series of commercial papers, you have Dangote series, you have CNI using all of. So people are moving their money from government gilt-edged securities and moving into companies that are rated and that can meet their obligations, short term. Then some of them are looking at treasury bills. Treasury bills were as low as 20% in Q1, and now they rose to 35%. But when the rates started coming down, people started pulling their money out of treasury bills. Look at corporate bonds. They put 12.63% of their portfolio in corporate bonds first quarter, dropped to 6.3%, it has increased to 7.67%. So corporate bonds are a good outlet. Then federal government bonds went as high as 22%, dropped to 21%, it's now 17% because the federal government bond market is being oversubscribed. So to those of you in the audience, and I see that we have 206 participants are moving to 250. Anticipation of Q3 earnings, corporate earnings, the things that are concerning you today, currency depreciation and forex scarcity and interest rate sensitivity of your portfolio. But higher prices. But if you look at the price appreciation of the stocks, the earnings growth of the stock, and the sector growth, you find that there are still many stocks that have potential to rise higher than where they are. There are conflicting signals in terms of restrictions, cryptocurrency, that and all of that. So we're seeing a lot of conflicting. But before we go further, it's important to go back to 001 class on investment. What are the things that concern investors and why are they afraid and why are they concerned? Why are they alarmed? Number one, inflation at 17% means that you are in trouble anytime. The money you had in your pocket today is 17% divided by 365 less in value by tomorrow. By the time, there was a time in Angola when people enter a bus, before they enter the bus for a long journey to the other end of town where they live, they change their money to dollars before they enter the bus. Because by the time they get to their destination, the value of the Angolan currency would have dropped. So that when they now come out, assuming that you work in VI and you live in Ikorodu, you say, look, by the time I leave here, by the time I get to Ojota, the value of the Naira would have moved. Therefore, before you go to a bureau de change and buy dollars, enter the bus. When you get to Ojota, you now convert it and then go and buy goods. That's what happened in Angola many years ago before they dumped the currency. So interest rates are low, so it doesn't compensate you for anything. And the currency is fragile. And you never know what the policies are today. People are saying, oh, central bank can come and seize our money and convert it at 400 level. No, that's not true. But because of uncertainty, people are afraid of any rumor. And people say there's no smoke without fire. So they'll be looking for the fire all over the place. What do investors want normally? They want to create wealth. They want to manage wealth. They don't want wealth to erode. Two people that benefit from the wealth of this generation who do not deserve it. One, tax to the government does not deserve it. Two, the children of the deceased who did not work for it and who will squander it and then end up with nothing. So those are the two beneficiaries of wealth that is created, but the wealth is not managed. But since they didn't create it, they will squander it. The government didn't create it, they will squander it. The children didn't create it, they will squander it. So children have to have skin in the game so that they can manage. Those are things that investors worry about. Now, is there a correlation between savings and interest rates? Yes, there is. What you don't consume, you save. What you save, you invest. And therefore, you have that, what you call the minor propensity to save, minor propensity to consume, but also you have the investment function where people now say, what planned savings or planned saving equals planned investment, but actual savings is not equal to actual investment, if I remember right. Now, the other thing you have to look at is that let us look at some countries. The higher the savings rate, the lower the inflation rate. Yes, the Pope is Catholic, so I'm not saying anything new. But also, is there a correlation between savings and growth? Yes, there will be, because the fact that you save means that it's possible that you have invested. The fact that you have invested does not necessarily mean that the investment is optimal, in which case you'll be getting the desired return. But assuming that in a basket of investments, the ones that are positive are more than the ones that are negative, it is possible because of the investment multiplier that an increase in savings will be equal to an increase in investment. An increase in investment will be equal to some large extent cross capital formation, and that will lead to a multiplier effect. And therefore, in the end, after discounting for time differences, because it's T1, T plus 2, you will find that growth increases because of that. So we have to look at what our national savings rate is. We have to look at our inflation rate, and we have to see whether we are responding like others. So whether the top, Macau is the country with the highest gross national savings in the world. It has an inflation rate of 0.38, almost disinflation, and they have a growth rate of 69% in GDP. Ireland, right, has gross national savings of 56%. Part of it, there are a lot of drain money, because a lot of companies are setting up in Ireland because of low taxes, and the monies are going down. That's creating all sorts of savings. So you can see that. So what the purpose of this table is to tell you that it is likely that if we increase interest rates, increased national savings, we will have lower inflation and higher GDP growth rate. However, the difference in economics between necessary and sufficient conditions has to be bear in mind. The fact that you did this, the fact that you increase interest rate, the fact that you increase the national savings increase does not necessarily mean that you get the desired outcome in GDP output. So we must understand that as an economist, not to say, oh, once you do this, this will happen. That's the difference between a necessary and sufficient condition. Okay, so we have inflation, which, why is inflation important to this audience? Because anytime inflation increases, it is likely that interest rates will increase. And anytime interest rates increase, the value of your assets, there's an inverse relationship between interest rates and asset valuations. So real estate property values will go down, equities will go down, bond prices will go down, will decline. So we look at inflation. Well, so inflation, the investor, the rational investor, including all of you on this call, are worrying about the return on investment. So far this year, we've lost over 3.49, 3.5. We've also lost our currency value. The official rate used to be 380. It is now the I&E window rate. And in the last 1 week, we've seen the crawling peg kick in, which has moved the I&E window rate from 411 to 415 as of yesterday. So, and then the power market, we saw it go all the way to 595, 58. It's now down to 585, 75. So we are beginning to see, and we'll explain the exchange rate in a minute to see convergence. Convergence does not mean unification. It only means moving in the right direction. Unification means when you get there. Okay, and that's when you're in equilibrium. So there's people, investors are concerned about policy and goals. We are not too sure. But even if the minister announces today and then the cabinet is resolved tomorrow, or there's a new president in 2 years' time, which there will be. So what will that president and who will be the ministers? We don't know. So how to deal with government policy uncertainty? We know, so people are worried about. Then we have other things like the ECOWAS protocol. We have other things like the African Continental Free Trade Area Agreement. Those things are also affecting stocks. I see the companies that are quoted on the exchange, which have African footprints, seem to be doing better than those who do not have African footprints. So your friend, Nestle, Unilever, Diageo, all of these companies are doing well. Are they doing well because they have an international presence? Not necessarily. They're doing well because they're Nigerian operations. But the truth is that because you come under multiple jurisdictions, your governance and accountability and transparency is likely to be higher. And in such cases, we've seen that happens and that things are working out very well. Okay, now we will round up in a few minutes. GDP has maintained its upward movement. When I say GDP, year on year, that we are comparing GDP in second quarter of 2020 with second quarter of 2021. So you are comparing a low base with a high base, right? So that is misleading. Recently, JP Morgan has reviewed downwards projection for growth to 1.5. The EIU has reviewed the projection for growth to 1.5%. If we grow at 1.5%, even though the World Bank is saying 2.5, and the federal government is expecting to grow at 3.5, if we grow at 1.5%, it means that Nigerians are 50% poorer this year than they were last year, because your population grew by 3.2 and your GDP grew by 1.5. So technically speaking, in real terms, Nigeria will be 50% poorer than it was. Here are the sectors that are growing. You can see that the ones that grew fastest due to basic effects are the ones you are seeing there: electricity, transportation, trade, and so on. The ones that have not been so rapid, you are seeing them there. You know that already. Let's not waste too much time. The areas that are expanding more significantly: ICT, MTN, Airtel, construction, Julius Berger, PW. They're building roads and highways, maintenance of roads. Trade, informal sector, 16% of Nigerians are 16% contribution to GDP is wholesale and retail trade. Agriculture, slowing, having difficulty, a lot of what do you call it, television time showing rice pyramids, but the price of rice, guess what? The price of rice is up to 28,000 naira, 29,000 naira a bag. Is it because Christmas is coming? Maybe, or maybe not. But that's what's happening. Accommodation and food services is also growing because hotels are back and so on and so forth. Right? So this is just the growth numbers. And we talked about the expanding and the contract sectors. Now let's look at the banking sector because it's very important. Banks are making money, their lending rates are high. So you can see interest rates across the board. But generally speaking, the highest interest rates here are about 14.9%, and it's lower than the rate of inflation. This is inflation. What do we expect? Inflation is projected next month. We think that inflation will increase. Why? Because of the exchange rate pass-through and also because of supply chain disruptions. So even though it has come down to 17.01, I will not be surprised if it goes up to 17.2 before it starts to moderate again. But we have some difficulty with prices. So food inflation is at 20.3, month-on-month inflation about 13, and annualized is 12.98 month-on-month. Now, inflation risks are elevated, insecurity and all of that. Activities are being affected. What do we see? Interest rates and inflation. We see negative trend there. Money supply is growing and increasing. Money supply growth has gone about 19%, 18.9, while GDP, with some luck, grew at 2%. So the difference between the two gives you an inflation rate, which is 19 minus 2, gives you 17. Coincidental, the numbers are coincidental, that's not an arithmetical equation. What else? We have seen the exchange rate. Today is at 573 in the parallel market. The INE is about 415. So there's a lot to go. There are middlemen, there are bank processes and all of that, but little by little, it's now we did an analysis yesterday, which shows that the true value of the Naira based on crude purchasing power parity is about 544, which means that it is overvalued to the extent from 31% overvaluation from the INE rate. So what we expect the INE rate to actually begin to crawl upwards, which is doing already. Maybe it gets to 420, 425, and the other rate will appreciate, the Naira will appreciate and start to come down, and we meet somewhere. So in October, we think because of pressures and inventory buildup, the currency may suffer some weakness, but then begins to appreciate by November. Then visiting friends and relatives come in December, and the Naira begins to get towards 500 or 490 again in the parallel market. So fundamentals remain strong, but again, everything depends on data integrity. Do we believe the numbers? But whatever it is, the price of oil, as you know, today is $80 a barrel for Brent, and our production is struggling at a 1.5, 1.6 million barrels. That's the Petroleum Industry Act, and things are not looking too bad, but they're fragile. So these are asset classes that you have to worry about. Nigerian equities, treasury bills, and we already talked about it. The outlook is that Nigeria continues to borrow domestically and internationally, and that's good for the markets. So once the instruments are there, you can buy it. But for the economy, if you borrow too much and you don't deliver, you also have problems. Money is fast spent. Public sector debt, we've talked about it. Total debt is now something like 33 trillion, while contractual external debt is something like almost $35 billion. Our reserves, by the time we draw down the bond and all of that, we get to about $40 billion. But again, we have borrowed money and external reserves. So there's going to be further securitization, further harmonization of interest rates to a single yield curve and federal government borrowing. Central bank keeping an eagle eye over the financial system. At the bank, are we going to go into a banking crisis? Not that I know of, but we have to keep our eyes. For every time there's a price of adjustment in petrol and an exchange rate adjustment, some banks always suffer. Okay, So we have to keep our eyes on the ball. Okay. So fiscal policy, we know what it is. The budget has been sent to the National Assembly. We have the infraco thing, we have modular refineries, we have all sorts of things happening at the same time. Monetary policy, we do not expect in November there might be an attempt to increase interest rates, but we have our doubts. At this point in time, it's very politically difficult to do that. Are we going to go back on BDCs? Not immediately. I think that central bank is going to hold the line, but the central bank will increase supply to the market, allow the crawling peg, allow it go up, allow it depreciate a little bit, and then we may begin to get some semblance of equilibrium, but not, it's still far away in the foreign exchange market. The economy and the markets, the economy can be growing, but the markets are not feeling it. The markets are moving and compensating people. And I'm not. Are there risks? Yes, there are external risks. Central banks in advanced economies could trigger capital flow reversals. Bank of England already announced this morning that they're going to increase interest rates. So what will happen to foreign portfolio investors who have money coming to Nigeria? They begin to inflation
Recording in progress.
Inflation will continue, will buck the decline trend and increase again. And exchange rate convergence will continue, and we've talked about it and where we think it will be. And demand pressure will ease.
Due to devaluation, what is your opinion about Nigeria doing same to save the economy?
Well, when you say save, because if you devalue your currency, then your economy, you solve a problem. There's no silver bullet to economic problems. Angola is a different country. We are a different country. Angola has a population of about 30 million people. We have a population of 200 million people. Angola has deep offshore Cabinda, and they have minerals like diamond and all that in Luanda. Angola used to have a government revenue to increase by a certain amount that day. Share prices should actually appreciate that day. But all of these things are static because the link between the external and domestic economy is tenuous. Those things are static because the policymakers the transmission effect from international prices to policy and policies to Nigerian market is tenuous. So and as long as you have that lack of policy synchrony, then you will have that problem. Thank you.
All right. And then one more question says, given the market, what is the market for Nigerian crude, given the growing global acceptance for EVs? What is the prognosis for Nigerian crude?
Okay, prognosis means that if you went to a doctor and they said, after taking this Nevaquin, will my malaria go? The doctor will tell you that in day 1 or day 2, you will still have poor appetite. Day 3 or 4, you have to take fluid, and day 5, you. So prognosis of oil and e-vehicles, and I said it at the beginning, year 1 and year 2, price of oil will go up, will increase because of the gas and all this other stuff. But in the long run, not the long run, the medium term, by the year 2022, 2023, as you buy electric vehicles, like it's like energy bulbs that we use in all over the offices here and at home. Once you start doing that, your consumption of energy begins to decline. So the truth is that in the next 2 to 3 years, the price of oil, the price of refined products begins to come under pressure. The price of new vehicles, which are electric vehicles, will increase, or actually it will increase initially, but it begins to decline because of technology. And petrol vehicles become expensive to maintain, and people begin to shift, even domestically within Nigeria. So rather than have petrol stations, you have places where you can charge your batteries.
And all of that. All right. One attendee says, can you please help clarify how the proposed International Finance Center helps our economy? And while you're addressing that, if you can just touch on the benefits of the e-Naira for the Nigerian economy.
Well, International Financial Center means that Nigeria becomes a hub for financial activity. Hub and spoke means that when you have a hub in a wheel and then the spoke turns it around. But if you have a hub and there are no spokes, then what's the point of having a hub? If you have a closed economy, why would anybody bring money in when they cannot take it out? How can anybody come in and not take it out? I'll give you a simple example. I used to be on, many years ago, I was on the board of Virgin Nigeria. We set up the airline with a view of making Nigeria a transit stop. Therefore, if you are going to New York from Abidjan, if you are going to Accra from Abidjan, you fly into Lagos, and automatically we fly you on our direct flight to New York. We set up everything with both the domestic and international departures in the same terminal in Murtala Mohammed International. 3 months later, or 6 months later, the same federal government that gave us a license to do that came and demolished everything and changed the domestic facilities to MM2 for whatever interest. Therefore, if anybody was flying from New York, from Accra to Lagos, he would take his bag out, he would enter a taxi to the other terminal, check it in, of course, get robbed on the way, right? Check his bag there before going to New York, as against transit. So you cannot, what I'm trying to tell you is that if you want to be a hub, then you have to have an open economy, you have to have a seamless movement of things. So what happened? The whole thing failed. Virgin Nigeria failed, the airport failed, everything failed because of one mad decision. Richard Branson pulled out of Nigeria. Ever since then, we've not been able to attract any international airline to come and invest in domestic activity because we screwed up. Now, if you set up a financial center where people can come in and cannot go out, can you imagine if they say you can enter this building, but there's no door out? Of course, you will not go in, right? Number two, you asked about the e-Naira. Well, I think there was a website or a portal set up yesterday for e-Naira. E-Naira is money, electronic money, right? What are the characteristics of money? It must be divisible, must be portable, must be acceptable, must serve the purpose of precautionary, speculative, and transactional motive, and must be a store of value. Now, what Nigerians are asking, thank you very much, we like it. And then somebody said that if anybody who refuses to accept the e-Naira will be committing a crime, will be arrested. And so I went to the market and asked somebody, I said, look, I'd like to buy, this was in Sapele. So I'd like to buy your gari with e-Naira. You must say, when you can go and buy e-gari down there in the market, there's a market where they sell e-gari. When you go there, the Naira that I can see even is losing value. The one I cannot see, that means it will be a ghost. So that's what the woman told me. So I'm just telling you what e-Naira means in the short run. Eventually, it will catch on. But for now, what you see is what you get.
Yeah. Okay, one last question, sir, because we've run out of time. What level of devaluation will be deemed as a true reflection of our naira and the impact of that open FX market without improvement in the export capacity?
No, I think we keep on saying, putting all sorts of conditionalities. In an open market, if for any reason today, the bridge between mile 12 or whatever it is breaks down and trucks bringing tomatoes into Lagos cannot come into Lagos, what will happen to the price of tomatoes in the market here? It will increase sharply. When the bridge is sorted out and supply comes, the price will decline. So there's demand, supply, balance, and equilibrium in a market. The currency is not any different from any other product. Nobody goes around saying that anybody who buys pepper above a particular price is committing a crime. Nobody. So let's just calm down. The naira will appreciate when the supply of naira into the market increases. The naira will depreciate when the supply decreases. It's as simple as that. It's simple economics. You don't need to go to any school. The most efficient economic agents, the most sophisticated economic agents are those women in the market. The woman who told me that you want naira, go and buy igari, she knows what she knows because she has to pay somebody else. She has to pay the man who brings the gari with her. And that man is saying, what are you talking about? Naira, sorry, go away, right? That is the efficient market. But tomorrow, just like they all resisted POS terminals and all that, after a while they said, go and withdraw the money from ATM and come and pay me. I need my cash, right? Gradually, some of them are now saying, okay, bring the POS because the charges came down. We are going to see reluctance initially, but eventually they will adopt it because if that is what people are used to pay, they will pay. So even if the one does not accept it, a daughter who knows how to use POS, a daughter who has a mobile wallet, a daughter who has an e-wallet or whatever we call it, will accept it and then convert that money to buy some things for her mother. That's what's going to happen.
Thank you so much, sir. As always, people, there's just so much coming in, but we have to stop at this point. Thank you, sir.